Okay, good afternoon, distinguished participants at this PEEF Virtual Talk, wherever you may be globally. It's 3 o'clock Nigeria time, and we are about to start the virtual talk for this month. The topic is mortgage finance, a viable gateway into real estate investment and peaceful retirement. We are quite excited to take on this topic at this session. The previous topic we had in Q1 was on climate change and cross-border security issues, possible solutions. That was an exciting session we had, and we are looking forward to another exciting session on the topic of mortgage finance, given the challenge that we have of housing deficit in Nigeria, in particular, but across Africa. Today, we have a distinguished expert in this area who will be introduced in due course. However, it's our tradition at People Expertise and Excellence Foundation, PEEF, to invite opening comments from the chairman of the Board of Trustees, Engineer Abdullahi Bukar. He prepared his opening remarks. However, he's in transit. He's traveling, and given the connectivity issues, we are hoping that he might be able to join and make his opening remarks. We will give him the opportunity as soon as he comes on board. Meanwhile, we will start formally. Our distinguished guest speaker today is Dr. Olabanjo Johnson Obaleye. Is the Managing Director, Chief Executive Officer of Angel Partners Limited. He has a lot of experience as a subject matter expert in the financial services, particularly in the housing subsector. He's retired from the role of MD CEO of Infinity Trust Mortgage Bank that has made quite some impact in the FCT area in terms of providing housing units. He was, or is still the non-executive director of the Nigeria Mortgage Refinance Company. Previously worked at AfriBank, Nigeria Limited, Midas Bank PLC, and Societe Bancaire. He has a lot of accolades in the area of academic and professionalism, Doctor of Business Administration, Fellow of the Chartered Institute of Accountants, HCIB, member of Institute of Directors. So our guest speaker is eminently qualified to provide us a lead talk today, and we are all expected to make our own inputs, questions, comments when we get there. So, Engineer Abdullahi Bukar will give his comment, but I would just like to show basically his talking points. So if I present this on his behalf so that we are in sync with our plan for the session, the opening remarks by the Chairman of Board of Trustees, Engineer Abdullahi Bukar, all protocols duly observed. It is my pleasure to once more welcome you all to another PEEF Virtual Talk, the second so far this year. This time we are going to be enriched by a well-qualified professional to address one of the key human needs, very high in our hierarchy of needs, provision of shelter. In addition, he will tackle how fulfilling these needs can be extended to provide gateway for real estate investment. It is anticipated this will provide a successful avenue for making sensible investments of our savings when in direct employment to enable retirement with a good portfolio of assets to ensure regular income. This is a very desirable personal goal to pursue, and we are very pleased that PEEF can get such experienced practitioner to enlighten us all. It is my pleasure to announce that the deliverer of the talk for this session will be Dr. Olabanjo Johnson Obaleye, MD and CEO of ITM Bank PLC. It's actually the MD of the Angel consulting firm. I will let the Honorable Secretary of PEEF commence the section and tell us about our erudite lecturer. I'm getting a call from the chairman now. Let me just. Hello.
I'm having difficulty joining in.
Okay, we have just started. We thought as much, so we have started, and with your permission, I've presented your opening remarks. And yes, if you can join us, please try to. Otherwise, we will carry on. Thank you very much, sir.
Thank you, but I need some. When I go in, they tell me I cannot join. Apparently, and then it goes off. So I will still keep trying and see what will come out.
Oh, okay, sir. Okay, sir.
All right.
All right. All right. Thank you, sir. All right. I was on Chairman Engineer Blair Booker. So I've presented his opening remarks. Unfortunately, he's having connectivity issues. I would now like to invite Dr. Obaleye. It's now your show. You have 30 minutes to present, and thereafter we will get into the interactive. You are a co-host, so you can run with this slide, or you can present, share your screen.
I would like to run with the slide, if possible, since it's already here.
Then you have to prompt for the movement of the slides. So over to you, please.
Okay. Let me try if I can get that one done. How do I move it?
Well, if you just indicate, it can be done for you. So just say next, and then it will be done.
Okay. Okay.
Yeah.
Okay. All right. Good afternoon, Chairman, Executive Secretary, the PEEF household. Ladies and gentlemen, it is my pleasure to be here to give a talk on mortgage finance. This is an area, just as the chairman has said in his opening remark, that is very, very essential for human living. I doubt if a period in life will be fulfilled without having a shelter we call our home. The presentation is divided into this outline. Since I have just a little time, permit me to just run it down. We're going to look at real estate, since we cannot have anything meaningful about housing finance without real estate. The goal of housing finance is to achieve our real estate investment dream. And I assure you by the time we complete this, if you are in doubt before, that we need to have millions of nairas or dollars in savings before we can start it. then I'll be able to prove you wrong at the end of today. So can we go to the next slide, please? So good afternoon, Mr. Chairman, the Executive Secretary, the PEEF family, friends, and other listeners. I thank Dr. Rabiu and the entire founding fathers of PEEF for this important, resourceful, engaging, informative, and knowledge-enriching platform. Real estate investment and mortgage finance should be like Siamese twins that should ordinarily go together, because the full potential of real estate investment can never be harnessed without an efficient and effective mortgage market. In an economy where there exists a very efficient mortgage market, real estate investment achieves a huge market penetration with all the virtues that go with it. Next slide. Okay. There are many academic papers on mortgage finance and real estate investment. My doctoral dissertation borders on these areas, and it can be found in academic journals and databases such as Emirate Management Journals and Google Scholar. Due to time constraints, I will not be able to make a detailed presentation about mortgage finance and real estate investments. However, I will ensure that a few minutes I have are well utilized to do justice to the subject matter. The growth and penetration of mortgage finance in Nigeria has been very slow, despite its enormous potential contribution to the development of real estate markets in Nigeria. Now that should be taken as my problem statement. Despite the enormous importance of real estate finance, despite all the things government has been doing over the year, why is it still slow in development? We'll see this by the tail end of this presentation, and what necessarily we can do to make it better. We'll see the recommendation too, especially for policy advocacy. So real estate investment has been recognized as an indispensable pillar around which housing delivery system revolves. Makinde in his presentation in 2004 and Obaleye in his academic research too confirmed this. Without a well-organized and efficient finance machinery, the goal of a housing development policy will be largely unattainable. Next slide, please. So this presentation sets the tone for this presentation. In approaching this, I'll first look at real estate investment and the benefit to both individual investors and the government. I will also delve briefly into housing finance in Nigeria, evolution of mortgage system in Nigeria, the benefit and challenges. I will wrap up the presentation with recommendations and areas for possible for policy advocacy and intervention. The presentation here will cover 8 focal points spread across 40 slides, with tables and word of mouth from successful and well-celebrated entrepreneurs across the globe to emphasize the benefits of real estate investment. The last 2 slides are references cited and those that is necessary for further studies. To underscore how important real estate is, we have it in our constitution, what must be one of the major focal points for government of a nation. Section 16, subsection 1D of the 1989 Constitution of the Federal Republic of Nigeria stipulates the provision of suitable and adequate shelter for all the Nigerian citizens as one of the fundamental objectives and principles of the Nigerian state policy. The same provision was made in 1979 Constitution. Perhaps this may be the most fundamental legal basis for government involvement in the provision of housing in Nigeria. Housing can be said to be an area of residential or commercial building with adequate infrastructure and social services in planned, decent, safe, and sanitary neighborhoods to meet the basic and special needs of the population. I'd like to expatiate more on this. Housing we are looking at, they are not just a place to sleep for the night. We're talking about well-planned area, decent and safe and sanitary neighborhoods. This is lacking in Nigeria. Even in our urban cities, we still have many places, many estate development that are potential slums tomorrow. But what we are looking at is decent accommodation, decent neighborhoods with sanitary neighborhoods to meet the yearning needs of the population. Next slide, please. So real estate sector plays a pivotal role in nation building. It is one of the critical pillars upon which the economy of any nation stands and revolves around. The performance of this sector impacts directly on the welfare of the citizens and the performance of other sectors of the economy. So real estate investment involves the purchase, management, and sale, or even rental of housing for profit or as a dwelling place. if the real estate ecosystem is properly harnessed, it has the capacity to reinvigorate the economy. The potential is actually enormous. So I try to look at investment in this slide. There are two categories of investments. We call feasible investment and unfeasible one. That is the one you can feel and the one you may not be able to feel. So I put this in two: financial assets and real assets. When we're talking about financial assets, we're talking about stocks, bonds, treasury bills, and mutual funds. And when we're talking about real assets, we're talking about precious metals, commodities, and real estate. Now, by the word real, it shows that you can feel it. It is physical. So it can never be zero, unlike financial assets. During the inflationary period, or when if you have equity investment and the company is down, your money is gone. But real estate will still have its value. You might be living in that house. That house has a potential investment asset for you. And it's equally a source of investment and capital formation for you. So real estate investment is a unique investment option for its potential to generate passive income and build wealth. Next slide, please. So I've said this earlier. We have residentials and commercial. We can go to the next slide. Okay, now you look at the benefit of real estate investment. In the United States, 70% of all tax revenue raised by local municipalities come from property taxes. This is the benefit of government of a nation. Then the next slide, I will look at the benefit of individual. So housing-related tax in South Africa accounts for 95% of local government revenue. Then the US real estate industry is a major contributor to the national economy, providing millions of Americans with jobs. It's a major component in creating stable and healthy communities if it is well planned. It is one of the feasible indicators of social condition as it transcends mere provision of shelter. It facilitates economic growth and urban development. In its full potential, housing produces value over and above its physical asset. This is very true. Can go to next slide, please. So when we look at it now to individual investors, what do you get from it? It's a good starting point for you to build your wealth. We have experiences abound. Most real estate developers who are big today, they started with just small amount of money and they were able to scale up and become a very giant in that industry. So it's a source of finance and leverage. You may be living in your house, you have an investment drive, you don't have the money. You can take the paper of your house to a mortgage banker. Can you mortgage this house and give me 10 million or 20 million so that I can pursue this dream I have? You can have that, though you are still enjoying the comfort of that house. So it's a good retirement plan for a potential to provide cash flow. When you plan your retirement very well and you start early, you can estimate what could be the probably average of my needs per month. So let's assume that you can make do with 20 million per month or per annum, so to say. You can build all your investment in real estate to that level that can earn you that amount every month after retirement. So you retire peacefully. So it provides opportunity to explore your entrepreneurial spirits. We have seen so many people coming up who are not building engineer, but they are entrepreneur. They are real estate developers. They started bit by bit. Somebody buys a house, fix it up, put it back on the market for a profit, or keep it for value appreciation. That is the beginning of starting that entrepreneurial business. Many of us started that, like that as well. So it offers inflation protection. It can never be worthless like stocks or equity when market go down completely. We'll see this as we go along as I compare. I had some survey done in 2020 to look at the impact of inflation on housing. And we'll see that it offers a lot of protection, unlike other means of investment. So it is a more enduring asset as it creates a lasting legacy, which can be transgenerational. What do I mean by transgenerational? This is the property you can will to your children as a legacy for them. So it can surpass your own generation. We can go to next slide. So the benefit continues. Can we go to next slide? Now, it's important to look at housing finance in Nigeria. There are two major sources. We have formal source and we have informal sources, as I said. So when we look at formal sources, we're looking at mortgage banks, federal mortgage bank, commercial banks, and cooperative. These are the places you can go to get money, to take loan and buy houses. Then when we look at the informal, which is what has been predominant years ago, you look at contribution from families and friends, which at times can take you like 10 years to 12 years or 15 years or more to finish a building. This is what we all born to understand, the informal way of building or having your own home. But we can see now that you can have your own home today without having the full money for it. Just pay an equity, maybe 10% or 20% as the case may be. You live in that house and you continue paying for it for 20 years as the case may be. We can go to next slide. So this just tried to show the various sources of finance for housing. Next slide, please. Okay, now it's important to look at how mortgage system evolves in Nigeria, how it started in Nigeria. Mortgage system started in Nigeria in 1956. That is before our independence, through the formation of Nigerian Building Society as a joint venture with Commonwealth Development Corporation. So Nigerian Building Society operated debt exclusively and mobilized savings from the open market with the objective to fund individual mortgage loans. On the eve of independence, housing corporations were established by the regional government to carry out primary mortgage business. Opinions added that low capitalization, high interest rates, shortage of long-term fundings, and difficulty in access to land were identified as the major challenges to the policy of home ownership. Some of these challenges are still prevalent in today, as of today. So this led to the acquisition of 100% ownership of the Nigerian Building Society by the federal government, secret to the Indigenization Act of 1973. So in 1977, Nigerian Building Society was converted into Federal Mortgage Bank of Nigeria. Next slide. So FMBN, by its enabling act of 1977, was empowered to perform both primary and secondary mortgage functions and to promote the emergence of private entrepreneur-led mortgage institutions. Government policy thrust on housing shifted to direct construction to rapidly bridge the housing gap and reduce the demand pressure for low-cost income houses. To make land acquisition easy, Land Use Act of 1978 was promulgated and converted ownership of land to government, while government can lease it out for 99 years. That is why we don't have freehold in our land system in Nigeria. They're all leasehold. So a new housing policy was launched in 1991 with focus on home ownership for all Nigerians at affordable cost by the year 2000. This shifted the focus to a private sector-led housing development. In 1989, Primary Mortgage Institution Decree number 53 was promulgated that provided the initial operating, regulatory, and supervisory guidelines for the primary mortgage institution. Next slide, please. So what do we expect? There are still lots of context to this, but because of time, I will just stop in that, talking about the evolution of mortgage system in Nigeria up to today. So what to expect from an efficient mortgage market? An efficient mortgage market will enhance mortgage penetration in Nigeria as it will solve the problem of affordability. It will enhance contributions of housing to GDP, as in the most developed and developing economies. It will attract sufficient long-term funds to meet all mortgage request obligations, as it efficiently links primary and secondary mortgage market to both local and foreign investors. It will lead to low interest rates in the long run and long-tenor mortgage loans, contrary to what is now existing. It has the capacity to reduce corruption and youth restiveness through its value chain potentiality. How do I mean when you said It has the capacity to reduce corruption. Many people dream of owning a home. If there is no well-structured opportunity for them to have it, then they look for ethical ways of getting to it. That is why in most developed economies, loans is encouraged. I will equally display as we're going along why people should not shy away from approaching a bank to finance their investment drive in home acquisition. The next slide, please. So these are the benefits you can get from mortgage finance. You have your property now, even though you only have 10% or 20% of the cost. Then debt repayments while property value appreciates. That is what we see. Your equity increases. In advanced economy, when you finance your house after 4 or 5 years, the property value will have gone up. You can approach the bank and cash on your equity to do other investments you want. Nigerian mortgage system has not gotten to that level, but I believe we'll get there someday. So again, it offers flexible payment options, like Infinity Trust Mortgage Bank, just like any other mortgage bank. We structure payment to when, if you have a regular periodic inflow, we structure your payment to meet that, to tally with that, so that you will not have unnecessary burden in repaying your mortgage. Then you have tax advantages. Most people may not know this. The interest you are paying on your mortgage is tax deductible. So it's an incentive from the government as well. So it encourages financial prudence and discipline. What I learned through my career is that when my salary appreciates without a cogent target, I discovered that the money will just go without knowing how it goes. But when you are paying mortgage, that amount you are paying every month will bring down the balance you need to work with, and it encourages discipline in that. So home ownership is an investment, as I have shown earlier. Warren Buffett, one of the richest men in the world, said that to build true long-term wealth, you must buy real estate. That's how we started. Next slide, please. Okay. So immediate acquisition of your home opens an opportunity to build wealth. Monthly payment should never be a burden, it's a sacrifice you have to make. Every payment made monthly is like savings, unlike renters. Once you pay for your rental apartments, that money is gone. So due diligence done by mortgage bank in the process of packaging housing loan gives further assurances of the genuineness or otherwise of the title. Mortgage bank does a lot of work in confirming that the property you are buying is genuine, because you are both equal stakeholder in that. If anything happens to that property, it affects the assets of the mortgage bank as well. So just like Roger said, don't wait to buy real estate. Buy real estate and wait. You see the value appreciation later. Next slide, please. So I tried to look at why mortgage is essential. What is the impact to standard of living or even per capita income? I took some countries across Africa, Asia, and America. And it's so clear. Where you have mortgage debt to GDP high, you have the per capita income in such country too higher. We can see Nigeria. The mortgage debt to GDP is less than 1%, 0.5%, while the per capita income is just about $1,969. While we look at a country like South Africa, where they have 23.3% of GDP, the per capita income is about 6,000. Malaysia, the same thing. Namibia, the same thing. Tunisia, the same thing. This is just to bring home that it is not a crime or a sin or a disadvantage in any way to get a loan to invest in property. Next slide, please. So this is just a continuation of that. This is just to show graphically through this histogram mortgage debt to GDP in the country cited. Next slide. Then this, compare the mortgage debt and per capita income in those countries so that we can see that they all go hand in hand. Next slide, please. Now, I said earlier that I carried out a survey in 2020 to see how real estate responds to inflation. And in doing this, I look at 4 properties, 2-bedroom flat, 2-bedroom bungalow, 4-bedroom duplex, and 5-bedroom luxury duplex. I took a period of about 15 years, okay? And I took a periodic of 2 years and get the average inflation for those 2 years and average price of those properties for those 2 years. And what I discovered with short truth, I will go to the next slide, please. Okay, this is what happened. In those 15 years, the price of 2-bedroom flat has gone up by 320%, while the bungalow has gone up by 350%, while the average inflation rate for those periods never exceeded 15%. So this is to just show that investment in housing is a kind of a way to defend yourself against inflation, at least compared to other means. Well, maybe when you put your resources in other economy, maybe it might be a convenient edge against inflation and fluctuations of currency, of foreign exchange. But this is our country, we have to develop the country. So we have to look at a solution in us. Now we go to the next slide, please. So this is just a continuation of that, the movement in housing prices for those periods. Next slide, please. Now, the major benefit of investing in real estate is the appreciation of the assets, which we can see from the survey that I did. So investors are always better off in the long run. As seen earlier, it is not only the property value that increases significantly above the inflation, but also even the rental income on that property increase as well. Can we go to the next slide, please? So there are a lot of challenges. Upon all the advantages and necessity I have captured for investment in real estate and how mortgage finance can be a vehicle for you to get started, we're still having a lot of challenges that has not been able to make Nigerians get to that level. To be able to reap all the advantages and the values of real estate investment in Nigeria. So there are a catalog of problems. Some of these problems, we work through them, and some of the problems in our home, we've been able to address some of them. So let's go to the next slide. We don't have a specific data to calculate or accurately say this is the housing shortage we have in Nigeria. But for about 10 years, we've been talking about 17,000 housing shortage in Nigeria. Some research side between 17 and 20. But one thing we should understand is that when we talk about housing shortage, we are talking about quality housing, not the one with potential slums tomorrow. So despite the various reforms, some of the challenges mitigating against affordability are still unresolved. Access to long-term funds and mismatch of funds, housing construction costs, both infrastructure and deteriorating value of Naira, access to land registration and titling, high interest rate, salary versus inflation, that is a kettle of fish on its own. Okay? Because the salary does not appreciate in same response to inflation. Okay? And so, but value of things outside appreciates, at least to a level of inflation. So people are impoverished. So at times it becomes so difficult to even manage this. But what I also realize is this: some Nigerians too are not real by themselves, because from my experience, I discovered that people have a fixed mind of the kind of property they want, even if their salary says no. But if they try to live according to their means, they will get a property that's, that can meet their salary. And if the salary appreciates tomorrow, they can bring up that salary, that property for sale, since their capacity has increased, and get a bigger one. That is the migration in most advanced world. People who are not married go with a condo. When they get married and their salary has appreciated, they leave that, they get their equity on that, they put it on another one that's bigger than that. But we want to start in Nigeria by POO 40. So another big kettle of fish we have is foreclosure law. Without an efficient and effective foreclosure law that guarantees the mortgagee, which is the housing finance of a company, of his either the repayment of the loan or immediate possession of the property on default, then it will be so difficult for mortgage bank to freely give out loans to everybody that qualifies for it. In my experience, I have not seen a single year that I've been able to give out up to 50% of those that qualify to get mortgages. Why? Because there are a lot of unknowns, there are a lot of things you cannot, you cannot reason with when you are appraising each of the loan requests. Next slide, please. So I have some tips that we should look for. You should have reasonable expectations. Mortgage for home ownership depends on your income. If what you can afford to pay for a mortgage is 100,000 naira per month, what you need to do, don't forget about interest rates. We'll talk about interest rate later. Because if there's no government vehicle that can subsidize that housing finance, then you don't expect to get from any financial institutions a single-digit interest rate for loan, because that would be a subsidy. Okay? Because anything you get, any rate you get, the loan inflation rate is at a loss to the company. So each customer, property, and transaction differs. Mortgage is not one size fits all. Look for what suits your finances. I would like to emphasize that. Title of the property is key. It is like a foundation. Once it is faulty, you may get in trouble tomorrow. So even if you have your full money to pay for a house, it's best for you to conduct due diligence on that property to ensure that, look, what you are paying for today is not going to be a trouble for you tomorrow. We've seen cases where people got a property, a landed property, put up his house on it. The owner of the land comes and said that, look, I'm the owner of this land. The case went from lower court to the highest court of the land. And they said that the owner of the land owns the property on it, even though it's not the one that built the property. So the man has to leave the place, build it for somebody else. So this is why this thing is very, very important. Next slide, please. Okay, so why interest rates should not scare you? We'll see the graphical illustration in the next slide. Interest rates is influenced substantially by macroeconomic indices. So don't look for magic. If there is no special pause from the states to give subsidized rates for mortgages, there's no way you should expect that. There are many things you can do. You can only afford 100,000 naira in a month. Your banker can stress your payment from 10 years to 20 years so that I can bring it that to what you can really reasonably afford. And again, I always advise, because of their interest rates, make sure you occasionally part liquidate your principal. This is a system, a strategy for you to reduce the impact of the interest on you. So the opportunity cost of not investing now is investing later with high cost or losing the capacity to invest at all as a result of rise in the prices of houses. Then the third one is there cannot be single-digit interest rate without government subsidy, which I have explained earlier. Next slide, please. So what I did here is to look at the impact of interest rates on the effect of it, why you should not worry much about interest rates. Okay. In 2009, a property cost 40 million naira, and a buyer approached a bank at 17% interest rates. In 10 years, he has paid interest of 29 million on that. This is when he follows the payment religiously without part liquidating. If he part liquidates the principal, like every time he has 500,000, pay against the principal, 1 million pay against the principal, you will see what you are supposed to finish paying in 10 years. You pay for it in 2 years. You will see that the effective interest rate at the end of that 2, 3, or 4 years might even be half of that 17% you have you have taken. So in 2019, that property that cost 14 million in 2009 became 47 million in 2019. Now, let's assume you have acquired that property. Let's say you acquire it for investment purposes. So you have it 14 million naira. You gave it out for rent. The study I did, it was 3 million naira per annum. So in 10 years, you have collected 30 million. So in 10 years, you have collected 200%, more than 200% of the cost you invested on it at that time. Now, when we look at the total cost, the effective cost with the cost of funding, we'll say that 29 plus 40 million, it costs you 43 million naira, which is still lower than the cost of that house in 2019. So this is just to let you know why we should not be too scared about interest rates. It's important. It's a major determinant. But we look at the macroeconomy situation in Nigeria and see what is real, what is not real. Otherwise, we fold our hands. We said, no, we cannot invest. And we lose a lot of opportunities. Next slide, please. So, way forward. The way forward to efficient mortgage markets, long-term funding. Steps are being taken addressing this. Like, I've been an executive member of Nigerian Mortgage Bank Association of Nigeria for many years. And we have taken a lot of initiative to see how this sector will develop as a private organization. We know if we have primary mortgage bank by definition are the originating bank. Now, in a very developed economy, they have primary, secondary, and tertiary. The three are very essential in housing markets value chain. The primary originate the mortgage, the secondary finance the originated mortgage, or refinance the originated mortgage, and the tertiary collateralizes and securitizes for long-term funding, which is what they trade in capital markets. So what means if you don't have a secondary market is that if CBN said my share capital should be 20 billion, once I create mortgage of that 20 billion, then I got stuck. So there should be a means of revolving that. That is why the secondary is very important, which is the role Federal Mortgage Bank is performing, and also the Nigerian Mortgage Refinancing Company. Before the advent of Nigerian Mortgage Refinancing Company, you will hardly see a mortgage bank that will give you mortgage loan for more than 5 years. This is not mortgage. But now we are doing 20 years, 25 years, 15 years as the case may be. So it means that now major bottleneck is no longer funding, or long-term funding. Then the major bottleneck now is how to reduce the interest rate, how to ensure that the bottleneck created by governments is removed. Because at times, it gives me a cause for concern that, look, government, this is an opportunity for you to make lots of money, but you have to make it friendly, make your cost of registration very friendly. But if it is not friendly, if it is not small, then many people will be discouraged from doing that. So under long-term funds, our banks and insurance companies should comply with the law by remitting their contribution to deepen the funding ability of FMBA. Federal Mortgage Bank monopoly nature may inhibit its ability to access long-term funding in the right quantum for the financing of mortgages. So it should be restructured to include the financing other mortgages as well. FMBA should concentrate on housing demand refinance, and streamline our processes for better closing period. What we experience now is not a business lag. Taking 1 year or more to get a loan from Federal Mortgage Bank is not business lag. So this has to be revisited and done in such a way that within a month you can consummate and close request for loan through the Federal Mortgage Bank. So FMBN should expand its function to include mortgage insurance like Canadian Mortgage and housing corporations. Security and SEC and SE should be more innovative to galvanize the full potential of housing-related securities. The listing processes and costs should be lowered to encourage better participation. The housing contribution to GDP can only be improved through effective linkage of the mortgage market to capital markets. We are still dragging in getting this thing done. The only secondary mortgage market that has been able to assess this is NMRC through government bonds and the rest. Then pension funds should be made accessible to contributors in funding their mortgages. What is the essence of having pension? If after 60 years you start, that's when you have access to it. And that is why you can start building your home. Talk has gone a lot in this. And I think now we're waiting for the modalities to come out. The pensioners, the contributors can access 25% of their function for their housing needs before their retirement. Next slide, please. Then the cost of housing development is another kettle of fish. So government should provide the primary infrastructure that is needed, where the estate developer is the one that provides the primary infrastructure and the secondary infrastructure. There's no way the cost of house will be, affordable to people. Normally, when government collect taxes, government must render services. When tenement rate is collected, it's expected that you have, provided services to warrant that. But where government refuses to provide services but insisting in collecting money, government will struggle with getting this money out of people. So government will revisit cost of access to land with objective of making it affordable. Government has seen land as oil that has to be made and give to the highest bidder. This is not the intent of the Land Use Act. The Land Use Act is to give easy access to land. When it takes you millions of naira to get land, then how is it going to be accessible? If developers get land at prohibitive price, definitely has to put the cost and its profit on it. So government needs to look at this. The PPP arrangement in housing development should focus on lowering cost of housing development. Then developers should explore alternative construction models that will be suitable and cheaper. We can look at local content, how we can have local content 100%. Then we'll be able to save ourselves from the vagaries of foreign exchange fluctuation. Then legal issues, another kettle of fish. I propose that a special call for adjudicating mortgage and rental disputes for timely closure is recommended if we are actually looking at attracting foreign direct investments in this sector. Property ownership rights must be enforced in a timely manner. If you are tenants in my house, you should pay me. If you don't pay me, you pack out. You shouldn't give me headache or years to get you out of the property. So if a rental law is revisited with the intent for the owner to enforce his rights in a timely manner, then I think we'll have investment in this sector. Foreclosure law, which gives right to dispose to mortgagee, would further give confidence to lender and boost mortgage lending. Next slide, please. So efficient system of land administration to facilitate titling, lands transfer, and stimulate growth of trading activity. Let me just give you this experience. Somebody approached us for a loan of 20 million naira to complete 50 million naira house he wanted to buy. Then we have to register. There are two titles involved. The person they want to buy the house from has his own title in his name. So before we can execute a mortgage on that, he has to register his interest first on that property. Then before we now enter our interest in financial on that property as well. The cost of performing these two functions, which is being paid to government, is almost 40% of the cost of the house. So this is encouraging. That is why most mortgage banks at times, when they see that the title is good, instead of them perfecting the mortgage, they don't perfect the mortgage. And what is happening? Government is losing revenue on that. Millions of naira can be attracted to government costs if the cost is lower. The cost of collection too will be lower at the end of the day. So government need to eliminate the self-imposed complications arising from land use acts concerning multiplicity of consent requirements in property transactions and its administrations. Government consent on an issued title, either for mortgages or outright purchase, must not require further consent. Once you have any transaction you are doing on a property, you need government consent. Even after you've had consent on the original one that gives you the ownership, for you to be able to perfect it, you need government consent, which we feel is not necessary. So title issuance and registration should be easy, economical, and convenient. We propose a ceiling of 0.5% for registration of deed, while 0.2% for registration of mortgage. This should be based on purchase price rather than the market value that engenders corruption. Because you come to my house, who give the value of the property? Maybe the government functionary that comes to me. So this your property worth 50 million. Maybe actually I bought the property for 20 million. But what is saying my property worth is what the rate will be computed upon. So government can streamline this by even having a stable rate for each property, maybe by the square meter of land it's occupied or by the type of property put on it. If this is done, it will ameliorate a lot of problem on this. The closing period for title registration must be within 30 days in the worst. As we have it now, 2 years, 3 years along the line, we have not been able to finish registering a title. And at times, I get alarmed of this. Next slide, please. Okay, so in housing development, government housing agencies' agenda should be pro-poor focused and prioritizing the vulnerable, while private real estate development investors can focus on other classes. So we need the subsidy part of it, which should be focused on the poor people who cannot afford it, so that it can be inclusive to all Nigerians. Slum upgrading in the context of housing and urban development policies must be an essential ingredient of our national plans, town, cities, and urban development strategies. The National Assembly is enjoined to facilitate the passage of various housing and mortgage amendment-related bills to reinvigorate the development of the mortgage sector. Efficient and enforceable foreclosure procedures would encourage good conduct from borrowers, while the lenders get the incentive to finance them. Efficient property database is equally very, very important. Reliable credit information system, credit bureau, is already in place. It was mandated by CBN that on every loan we give out, we must at least patronize 2 credit bureau firms to check the credit worthiness of that customer. And once a customer has a bad credit history, it's closed for him. So subsidies are sustained by government to mortgage finance for the low income bracket is equally recommended. Next slide, please. Okay. What's our takeaway from this for investors? Investors in real estate become wealthy because of appreciation in the asset value and cash they earn in form of rental income. Mortgage finance makes access to home ownership easier. Interest rates should not scare you from investing in real estate, as I have displayed earlier. Owning a house affords individuals a sense of security. It provides emotional stability and strengthening financial well-being. It eliminates the fear of retirement. So owning a home is a keystone of wealth, both financial affluence and emotional security, says Sus Oman. Next slide, please. So if you plan it well, you must get it right. Real estate investment is a gateway to your future security. If you have not started, you can start now. It's never too late. Next slide. So there's a fundamental mismatch between the underlying growth of demand for housing, which is driven by rising population, incomes and aspirations, and the weakness. This is my summary and takeaway, and the weakness of the supply. There's need for innovation, development of mortgage market, product and approaches, and in public-private partnership that enhance housing affordability for a wider spectrum of the population. This effort needs to be supported with good policy. Next slide, please. So thank you, ladies and gentlemen. I have to rush through this. There are a lot of things to talk about, a lot of things to take away, but just accept it the way it is. I believe this is not going to be the only time I'm going to come before you to talk about mortgage. We're still going to find other time that we'll engage ourselves the more. So the next 2 pages are for references, which you can go at your leisure time to go through. Thank you, Mr. Chairman, for the opportunity, and thank you, the Executive Secretary, for the opportunity. So now I can take your questions.
Okay, thank you very much, Dr. Obaleye.
Thank you, sir.
For this quite exciting presentation, which is also very topical, because housing is a basic need for everybody. Okay, so it's now time for interaction. If you would like to make a contribution, ask a question, or make comments, please indicate in the chat. Just indicate by raising your hand or just typing something. while we are waiting for that, I think we have a chairman now with us, and I will invite him to make his intervention if his connectivity is still on, if he can hear me.
Thank you very much, Honorable Secretary. Dr. Obaleye, that is great. Unfortunately, I'm on the road, so my connection has been not so good, but I was able to follow about 5 minutes after you started, and I'm very happy I did.
Thank you,
I
sir.
find it fantastic, and it's something that I think we will cherish and would like to see also use. One of the things that came to me is it possible for organization like that to have, how do I call it, know your customer, regular contacts, so that people will know how to join and commence this virtually right from the time they come out of school, so that people grow up knowing that this is a way I can build up my future. And that will be a great help. All our members, I think this is a very enjoyable lecture, and I look forward to something similar in the future to make it also clear that the opportunities that we should explore, and people need to by themselves and look at what is available and may grow. Because when you pull the resources that is needed,
Okay, Dr. Wale, can you hear me? I think there's a poor connection there, but you
Yeah,
had
yeah,
comment,
yes,
right?
but there's one thing I gathered from what Chairman said, which is very, very pivotal, awareness. Many people are not aware of this opportunity, but we try as much as possible to, take the advocacy even down to associations, cooperatives, to let them see why it is necessary for them or why they shouldn't run away from, high cost of owning a home. We interacted with a lot of cooperatives, even in government cycle and in public cycle too, as a way of letting them know what we have and what is possible. I think that is why we'll be able to have some bit of tractions we'll be able to have in the sector. Know your customer is very, very necessary, and it's part of the requirement even or CBN. And that is why the due diligence is very, very essential for mortgage institutions and other housing finance organizations as well. Without knowing our customer, it will be difficult for us to appraise the customer and to see his capability. Ordinarily, if you earn less than 500,000 naira in a month, we do not expect you to spend more than 33% of your monthly salary towards your mortgage financing. If you earn like 1 million, yes, you can go to 40 to 50%. If you earn 2 million, you can go to 60 to 70% of that. So in getting to know this, there are some basic requirements to ask from them. Like, we want to see your payslip, we want to see your account statement for 1 year. Let us see the periodic inflow that goes into it. We want to see your letter of employment to see if you are pensionable or if you are not. So because the interest is not just to give you a house and start pursuing you to get that house back. So it is equally part of the education that is required for every mortgage finance institution to give to their customer before a mortgage request is consummated. Thank you, Alaji. We'll continue working on this to create more robust awareness for people on this. Thank you.
Okay, thank you very much. We have another participant who would like to say something. Alhaji Ismail Shekuni has raised his hand. So please, could you go ahead? Okay, we can hear you. I hear your voice.
Good evening. Good evening, everyone, sir.
Good evening.
Yes, sir. We enjoyed the lecture and it was very interesting. Thanks
Thank you,
to
sir.
the presenter. But my own also go in form of an advice because this lecture is loaded with a lot of information for us. Can we there have a way maybe to record it and then they send it to we participants to be able to still go over it once again and then be able to, because it has a lot of information for us. And most of us are getting closer every day. So we pray that they should be able to do a recording for us, then they send it to our mail or to have it as a lecture to be referred to at all times, sir. That is just my way of contribution, sir.
Oh, okay, thank you very much, Alhaji Shekweni.
Yes.
That is our standard practice at PEEF. The sessions are recorded on YouTube and participants get the link to access the recording. So that will be done also for this session.
Thank you very much, sir.
Thank you for your contribution. Okay, I see Professor Dabo, would you like to say something? Okay.
It's muted.
Yes, please unmute if you like to say something.
Hello. Yes.
Good afternoon, Prof.
Good afternoon, sirs. And Mars, if they're there. It's really enlightening. We have gained a lot. I wanted to ask a question with respect to civil servants who are already approaching retirement. Is there a way they can equally key in? And if, or what is the minimum number of years for a person to key into the system?
Okay.
Thank you, sir.
All right. Thank you, Prof. It's actually advisable because of the impact of the interest rates to key into the system early. Because the shorter the period you have to pay, the more you need to pay. Like the standard practice is to ensure that the payment of mortgage does not go beyond 60 years. So as you retire, you don't have another burden of paying mortgage, you finish paying your mortgage. So most of the time, most of us at mortgage industry, we have that benchmark of 60 years. So in some cases, maybe we can extend beyond 60 years. Then we'll be asking for maybe like mortgage protection insurance, something like that, which are basic. But quite frankly, you can be able to use your pension funds as a big support towards owning that. So you don't need to actually wait. That is another area of advocacy that we require. 25% towards maybe that should be graduated. Like if you are 50 years or 55 years, and you don't have a house, or you have a house you have in mind you want to buy, 25% will not take you anywhere. So why can't they give you your 50% and let the remaining one be there for you after retirement? So, but the serum is not built in a day. We have to start a journey of 20 years, start by taking a step. So the 25% that has been approved, let the modalities come out and let's start running by it. Maybe after some years, we'll go back again and say this 25% is small.
Thank you.
So I think our only vehicle, our only major source now is through the pension funds.
Thank you. Thank you, sir.
Thank you, Prof.
Okay, so Hilaluddin Mohammed, you have any question or comment?
Hello, good evening all, and thank you for the wonderful presentation. My comments are, the presentation was excellent, and I'm glad Dr. Laid out some very valid points with regards to the mortgage and everything. And I think, like he emphasized, there is a great need for government to subsidize at least infrastructure, because as a developer, one of the most challenging things we face is having to provide houses and then infrastructure at the same time. So all in all, the cost of infrastructure adds to the cost of the houses. And looking at the market now, people are looking towards affordable housing. And if private developers, where I come from, need to be the ones to provide infrastructure, I think it really makes the houses unaffordable. So going by what Dr. said, I think it would be really good for us to, as pressure groups and associations, to put pressure on governments to at least provide infrastructure for all these products. And regarding investment, I think just like Dr. said, real estate remains one of the safest means of investments. So thank you all for the wonderful presentation. And I hope we'll be seeing more of these kinds of presentations by PEEF. Thank you.
Thank you, sir.
Thank you very much. Dr. Obaleye, maybe you want to expatiate a little on the idea of PPP arrangement, which you mentioned with regards to infrastructure, because government cannot do everything. So if you could just say one or two possible initiatives in the area of PPP.
All right, Doctor. Let me just answer it by giving you a practical experience. In 2014, I attended the program, a workshop in Canada, and the mortgage institutions, commercial bank that finances houses, and the real estate developers were held there. And the real estate developer gave, a presentation, very enlightening. He went to a municipality to buy a land to develop. Before he starts, all the infrastructure needed, the primary infrastructure needed, the municipal government would have provided that. What he did is just to give them the time he wants to start so that they can provide that infrastructure. So the option left for the municipal is maybe to go to the capital markets and look for money to quickly provide that infrastructure so that by the time the property is developed, it will get tenement rates, all those other taxes, property tax from government. But when it was difficult for the municipal government to meet that demand, what they did is that, okay, you can go to the bank, to developer, go and get the money and build this. This is our estimate of the cost of putting that infrastructure there. Get this money and you can collect the tenement rate for a number of years. After that, you revert back to us. So the meaning of that is that government understands the responsibilities and the growth and development of that society is now moving faster than government. For government to move close to that, it has to be ingenious in the policy. So that is why they put that one in place. So the same kind can be reestablished, can be brought back to our system. Government, they can have for every development, they can have their cost. Real estate developer, I don't have this money. This is the cost of building this. Go and look for that cost. Then you're allowed to collect the tenement rate for also a period of time on that. If that is introduced, I'm sure that we'll see a lot of tractions in that sector. But what we have now, estate developer bring in the primary infrastructure, bought all the transformer that is needed. When government comes in, even pay for the meter. Then you now have to be paying government money without providing any services for that estate. So that is the area I'm referring to when I say PPP, both on infrastructure, even both on development as well.
Thank you very much, Dr. Obaleye. I think we have had a very exciting presentation from you. And we have slightly gone above our time budget, but I think
Yes,
it's worth it. It's worth it. It's very informative, very interactive. So we're winding up now by way of just a quick reminder of what the session has been able to cover. So a robust background, historical background of the housing industry was provided. Also looking at the ecosystem of the real estate investment in Nigeria, the constitutional provision, sources of housing finance, and then real issues around how do you compare Nigerian situation with other countries through the mortgage debt ratio to GDP as well as per capita income. Nigeria is relatively low compared to those comparative countries, and we need to really do something about it. The case study of Sun City also brought out clearly the issue of inflation versus the cost of funds, that is interest rates. It's better to invest now and then wait and see the rewards, because over time inflation reduce the value of your cash assets. Challenges were presented. One of the ones that I just want to highlight is the foreclosure law, which from what the guest speaker said, if you look at the demand for housing mortgage, only about 50% of the demand is being met because of issues around foreclosure law. So this potential demand can be increased in terms of supply if we deal with the legal issues around this point that has been raised. He also provided tips that we should look at, but the question perhaps that we also need to think is inflation drives costs of everything. So what are the key factors that also influence interest rates? We saw yesterday the CBN increased the interbank rate from, I think, 11% to 12%.
13%.
13%. So that's a major, increase factor to the cost of everything, including building, materials and so on. So these are issues that should put in context. The guest speaker also gave us way forward, long-term funding issues, cost of housing development, legal issues, like I said, in particular, special court for adjudicating on mortgage matters, foreclosure laws, and so on. And finally, the takeaway for investors, of course, for also the key stakeholders in the industry. So this has been very, very rich presentation. As usual, we will be sharing the access to the recording, which will be on YouTube as the speak is being streamlined. So all participants will get access to it. On this note, I would just like to do the ritual of a vote of thanks. We'd like to thank the guest speaker for giving us his time, sharing his experience, knowledge. He's been at this for over a couple of weeks now, just getting ready for this session. And I should also mention that right now he's been bereaved and he's at the location for the funeral. But because of his commitment, he has taken our time to make this presentation. So we really appreciate your sacrifice, Dr. Obaleye. Thank you very much.
The pleasure is mine, sir. Thank you, sir.
We also thank our chairman, Board of Trustees, Engineer Abdullahi Bukar. He's actually on his way to Daura, and I believe he was speaking to us on route. So we really appreciate his contribution as well. All our participants that have been here, we appreciate you all for your contribution. The team that is usually behind the scene, these are Jamila that have been covering the admin side, the IT side. We all appreciate you. Thank you very much. And the next PEEF Virtual Talk, maybe in Q3, we'll be looking at issues around the legal challenges we have in the country. Our guest speaker, is a professor in legal matter, and we'll be looking at perhaps law and socioeconomic challenge in Nigeria. As usual, PEEF brings topical issues that we expose key challenges and what practical solutions we can profile to make our society better and build the nation in the right direction. So that will be our next focus on the PVT platform. On this note, thank you very much. And I say bye-bye to you. Bye.
Thank you, sir. Thank you, Chairman. Thank you, Executive Secretary. And thank you,
Thank you, Dr. Obaleye, and thanks to all participants. This is very much enlightening. I look forward to a repeat sometime in the future.
Thank you so much, sir.
Thank you, Chairman. I didn't know you were still there. Thank you so much, sir. All right. Thank you.